I would not be surprised to see this market pull back here a bit and at least challenge and retest the 100-day moving average over the course of the next few days to next week. That would not be a surprise at all. So here's what you need to know before the bell this morning. The market had cleared the 100-day moving average, which was good news. And the potential here is a retest at some point for the markets to confirm that the bottom of this rally from the lows is actually in. And we haven't seen that yet. We've had 4 very, very strong days of a rally really kind of coming off that Monday low. So we had the Monday low. On Tuesday, we rallied a bit following that yen kind of crash. Corrected all that back on Wednesday because we ran into the 100-day moving average, failed there. So we kind of turned the 100-day into resistance at that point. Market failed. Then on Thursday, the market cleared the 100-day moving average, and then it's been up and away ever since. So once we got through that initial resistance at the 100-day moving average, there hasn't been a whole lot to stop the markets. Now, the good news yesterday is that the markets cleared the 20-day moving average as well. But that 20-day is now below the 50-day moving average. So the 50-day moving average today is key resistance. This is going to be a big challenge for the S&P here, at least for today. Now, if the markets can clear this 50-day moving average today, say CPI comes in extraordinarily weak and the markets go, yay, the Fed's going to cut rates by 50 basis points, whatever it is, whatever the driver for the market is, that's going to push. If we can push above the 50, we've now cleared this resistance, and that leaves the market kind of open to rise higher from here. But again, we've had 4 days straight of fairly strong rallies. I would not be surprised to see this market pull back here a bit and at least challenge and retest the 100-day moving average over the course of the next few days to next week. That would not be a surprise at all. And honestly, that would be a bit healthy for this rally. If this rally is going to continue, what would be healthy for this rally is just a bit of a pullback here that allows for a bit of breather that then challenges 100-day moving average, then come off that, and then go ahead and rally back towards, resume the bullish rally and start establishing a bit of a trend in the markets higher. We haven't got that yet. Right now, we've just got this rally coming off the lows. We haven't had a retest of any support at this point to start establishing a trend. Right now, that trend remains downward. And we're right at the top of this downtrend right now, challenging the 50-day moving average. Now, again, if we can clear this, right? So if we can clear that if we can clear that trend channel and clear the 50-day, then all of a sudden we can start talking about, well, a correction back and then off of that trend channel. So there's a couple of outcomes from here for the markets. But the one thing to really pull away from this is right now, there's not a tremendous reason to be overly bearish. There was we had this big shock event on Monday that certainly got everybody's attention, really brought the bears out of the woodwork on Monday. But we have very quickly reversed all of that volatility spike. So here was that big volatility spike that we saw last Monday. Again, everybody very nervous about this. Everybody had to do a very fast unwind. Since then, we've pretty much brought volatility index back down. We're below 20 as of yesterday and heading lower. So as this market rallies, we kind of keep heading lower in volatility here, at least short term. Now, importantly, back to the S&P 500, we're about to trigger a MACD buy signal as well. That's going to also provide support for the rally. Now, just because you have a MACD buy doesn't mean the markets can't have a correction short term. But if we're on a decent buy signal from a low level, which we are, markets are not very overbought yet, so there's more room to kind of move higher here, which means that dips will likely be bought here, at least in the short term. And there's a few reasons for that. As we discussed yesterday, buybacks, that window is now open. You've got pensions that need to buy right now, particularly going into September. So you've got a lot of buying power set up for the markets over the course of this month and next month that can keep this market, kind of at least supported, if not moving higher. So again, we're still in that period of time here before the election that we can certainly have some corrective action. And there's a lot going on with that political outcome right now that could weigh on markets as that really starts to heat up here as we get towards the election. We could see another round of kind of de-risking. So again, be a little cautious here, continue to manage risk, but don't be overly bearish. The market's doing just fine here. We've had a very normal, 8% correction. We talked about 5 to 10 back in June and July. We've done that process. Markets got oversold. We're coming back on buy signals. So again, don't be overly bearish, but also don't ignore risk here, at least over the next 2 months as we head into the election. Lots of stuff coming up, but CPI, that's going to be the big one today. That's what you need to know before the bell this morning.